So now we will be discussing the possible bearish trend reversals. We have discussed in the previous section the bullish trend reversals. In the bearish trend reversal, the first pattern is engulfing bearish pattern. It means you have a bullish trend. You see the candles are going up, and then you have a red candle which is engulfing the previous day, last day, the green candle. So it's starting from higher than the previous day closing and is finishing lower than the previous day opening. So it means there is a big price rejection. So people are not intending to buy on a higher price, and there are a lot more short selling. So it is a price rejection, a huge price rejection. When you see this pattern, and after this you have another candle which is either green or a lower, uh, either red or a lower green candle, this would be a confirmation that a bearish trend is starting soon. So it would be a better idea, good idea to sell your stocks here or in the next day. So if you have bought the stock in this level, you can sell your stock at this level, you are still in the profit. So that is where you use your stock selling limits. So benefit of stock limits are you are not losing all the profit which you already gain, but you might be losing some profit, but you still have more profit to keep in your pocket. Short selling, I'll keep this question towards the end. I'll let you know. This is very dangerous stock trading because skies are limit. If your idea doesn't click right, then stock can go. For example, you're trying to short sale. When you're trying to short sale, it means you're saying that stock, you're assuming that stock will go down and you're selling at a price. But if stock goes up, then you will lose your money, a huge amount of money, very soon, and you have nothing to keep it control. So I don't recommend anyone to do short selling until unless you have advisor with you or you have the experience. In the stock trading, generally I suggest people to engage with an advisor, so they can advise you when to buy, when to sell. So I'll try to discuss towards the end of this. So on this pattern, if you see here, this is an example of the live trading. So you have the bullish trend, a bullish trend is starting, but here you see a green candle and then you have a red candle. So red candle is either starting from the same level uh, where the last day the green candle finished, or maybe higher, and then it goes very down. On next day it goes further down and further down. So this is a bearish trend, but you see after this trend reverse itself, because here you have a green candle, a red candle engulfing pattern which is showing the bearish reversal, but here you see again a green candle engulfing pattern which is the bullish reversal. So you have to keep an eye on these. So there is another bearish it goes for a bearish trend, goes little bit down, and then again you have the engulfing candle, and it goes up. If you remember previously, we did talk about the hammer pattern. Everybody can hear me? So Sayed, probably there is some issue with your audio. So please try to fix that one. Okay. So if you see here, this is the hammer we discussed in the bullish candle previously. A hammer, then a green candle goes further up. This is again the hammer candle, but when hammer candle becomes appears in the bullish trend, and when the bearish trend is starting, this hammer is called hanging man. It's almost same thing, but it is a bearish reversal candle. So it has a different name. Just just to identify that this belongs to a bearish reversal trend. So you have a bullish trend, and then you have a hammer kind of candle where you have a body, and then you have a long uh, lower side wick, and next day you have another red candle, maybe here, maybe somewhere here, doesn't matter. But if it is a red one, it means the bullish trend is starting now. So it's a good time to start short selling, or if you already have these stocks, it's a good time to sell your stocks and realize your profit. For example, like this. In this real chart, you see there is a hanging man here. So just to make clear, the hanging man can be uh, red or green, but next day should be a red, which confirms a bearish reversal pattern. So here you see hanging man, and then you have a red candle which is showing a smaller bullish trend as reversing back to a downtrend, a heavily downtrend. So you can see the price goes from 185 as goes to the level of 145, almost 30% loss. Shooting star. Shooting star is again the similar kind of candle which you saw in the bullish reversal pattern. It is called inverse hammer or inverted hammer. So when it comes, the same inverted hammer, when it comes during the bullish trend, that means our trend is reversing to bearish. When this hammer comes in the bearish trend, it shows that the trend is reversing to a bullish. So it depends at which trend this inverse hammer appearing. If it is appearing in the bullish trend, then it is called shooting star, and then you can expect a possible reversal to bearish. Again, you need to, this candle can be green or red, but the next candle should be a red candle. So in the previous example, we have seen the bearish engulfing here, but here you can see a shooting star. A shooting star is here. You had a bullish trend here, and then you had a shooting star, and after that you have a green, but again after that you have a red. So in next couple of days you find the red one. This indication is the bullish trend is starting soon. It can be next day or it can be next couple of days. So you see, and this is very strong indication for the bullish trend. It goes very down. You see here how deep it took. So this is the shooting star pattern. Doji. So again, remember we discussed the doji in the bullish trend also with very small body, long wick. So when this doji comes in the bearish trend, towards the end of the bearish trend, it becomes an indication that the bullish trend is starting. But if the same shooting star doji is appearing on the bullish trend, this becomes an indication that the bearish trend is starting. Again, this can be red or green, but the shape should be you have the green candle, you have this, and then you're going to the red candles. This is very small body. The doji will always have very small body. For example, this one. You see doji? So when you have a doji, you have very big candle immediately after that. That's a very good example. But it is not necessary you have a big candle after that. You may have a candle, a green candle moving around the same area and then it's going further down. But this is an indication and you need to be consciously watching what is happening next days. I have a black line here too, just to give you an indication that the support or resistance which we will be discussing, but just a heads up, if you draw a line at somewhere, you see that the candles are moving around this line more often. So if I discuss this particular chart, your stocks were moving at this line and then it goes down, then it's come to this, cross this line again, reject it. You see there is another uh, gravestone doji, which is although it's green, but it's still indication that it is reversing. So it's go below to the uh, price level here, goes up again, it goes down, goes up, and goes further down. So virtually the stocks created a resistance or support. So this same line becomes a resistance when you are going from uh, down to up, it becomes your resistance. So stocks has to break the resistance. So when you break the resistance, then price rejection come back to the same price and it's go further down. Then it becomes resistance. You have to break it. When you are up to the resistance, upside of the resistance, the same resistance become your support. So it depends how strong the resistance and support is. So it goes down, it goes further up. Probably this is a strong resistance support level. So and next day you for to break the strong resistance or strong support, someone has to have a big volume induction trend during this trading. So on this line, you see there is a huge volume sell which broke this resistance strongly. So resistance should be broken strongly. It went for very down and then it didn't come up. So it's a hard break. So So when you find this trend also, that this is a pattern that it is moving around the resistance, so it means the resistance is very strong and it's not letting price go up. So this is also an indication. Even from this level, after this level, I would assume that this is a strong resistance, and if it is broken, it will go very down. Next is evening star. It's you remember shooting star, morning star in the bullish trend. It's the same thing, but it's appear in a different trend. So it's appear in the upward trend, and which shows that the bearish trend is starting. Generally, this evening star is a sandwich between the green and the red candle. So I draw this red candle a bit later below, but it should be here. In the example here, you see this is the evening star. You have a green candle here, and then you have a red candle. So this shooting star become a sandwich between the green and the red. So too many candle pattern today to discuss. You don't need to memorize them, but when you do the practice, you do follow them, then it should be okay to you. Like this is the hammer candle here. So this hammer actually supporting the upward trend. So it is coming back to these are the same chart which we have engulfing, bearish hanging man, and then there is a evening star here. So you have a red candle, you have a green candle, and this is a small body, it's a shape, and then it goes further down. Even though after next day you have another green candle, but the indication was it will be going down. So these are all the indication, but you can still find some bullish candlesticks too, like this one. This is also bullish. These are also bullish. Three black crows is a similar pattern. We have three white soldiers. For the bullish trend reversal, we have a three white soldier. For the bearish trend reversal, we have a three red candles. So after in a bullish trend, when you have a three red candles, it can be close to each other or it can have a gap between. But these are three red candles. Once you have it, it means this is the bearish trend indicator. Again, the same chart I'm using here. But see, here are three black crows. In the same chart, here are three black crows. So when you have this indication, it means the bullish trend is confirmed and it will go further down. So these two indicators come side by side, which is the strong indication that the trend is reversing. But it is not necessary that you have these combinations, but you can only have the red candles also, like this one. These are also three uh, black crows. So when you have that, you see it goes down. Remember the bullish harami pattern? It's a similar, but it's a red to green. So you have a very small red body after a big green body. So that is becomes a harami pattern. So if you see in this, you have a harami pattern here. You have a big green candle, then you have a small red candle, which is almost 1/3 of the size of the green one, which is around 25 to 30%. So if this is the size of the candle is around 25 to 30%, and it is just coming between somewhere, I'm not saying it should be at the bottom or upside, it should be somewhere in between, then this is the bearish harami pattern, which indicates that the bearish pattern is starting. So once it is started, it will go down. Similar to the bullish harami cross, we have a bearish harami cross. It's the same pattern, but it is appearing in the bullish trend, which is giving an indication that the red is starting, the bearish is starting. You have a green candle, you have very small body here with a cross, it shows like cross, and then you have the red one. This is an indication that the bearish trend is starting. You see here, you have a green candle and you have a cross. Even the body is so small that it looks like just a cross, and it's starting a bearish trend. So you may find multiple indication here. For example, in this one, you have a cross here too, but it was outside your body, but it still goes little bit down, and you see this simple moving average line also. After this cross, you have a three cross. You have three cross here too. You can consider three cross here too. So this is all the bearish trend, and then you have the shooting star gravestone doji, which is going further down. Again, the gravestone doji is going further down. Then three stars also. So you can check how many patterns you see in one chart. There is another uh, harami cross, which is coming within the body. So these were the bearish trend reversals. And we can continue with the part 4, where possibly whatever trend we have is showing that the trend is not changing. It means market is balance on that, making the balance on that trend. So buyers and sellers both have similar control. They are almost same. So market is not decisive in which direction it should go. So whatever the pattern we have, it will continue bearish or bullish or just in between, sideways. So generally if you have a small bodies like cross, generally the cross means it can go in either direction if you have a similar kind of body before and after. And similarly, like these candles, if you have this candle and then next candle is this, it means market is not decisive. It is called spinning top. So market can go in any direction. It's a good idea to stay out of the market at this time and just wait until unless the trend is confirmed. And similarly, if you have a red candle in the bearish and then you have a three green candles and then a red candle again, which is even down. So keep the important things to note here. these three candles are still within the body of the first red candle, almost. So if the red candle starts at this level and finishing start at this level, finishing at this level, and you have a green candle which is around this area, I have zoomed up, that's why you can see like this, but this is candle here. I can show in the annotation. So actually the green candle is somewhere starting here. The first candle is finishing here. The second is starting somewhere, I'm just throwing number, is finishing here. The next is starting here. These are all three green candles. But you see, your green candles are still not getting out of the original body of the first red candle. If they are playing the green, it means the bearish trend will continue. So this is not the reversal then. Same way, if you have a bullish trend, and you have candle, this is zoomed out, but if you have the candle here, so your red candle starts here, the first finish here, next is here, finishing here, next is here, finishing here. So if you are still within the first green candle, it means even in 3 days the trading is not uh, getting out of this green candle. It means that trend will still be bullish. So it means you have the strong buyer's control, and buyer is not letting the price go down. So buyers are controlling this. So if these three candles, even these three uh, red crows, even these three red crows, if they are not going outside of this green body, it means it will go continue to the upward trend here. So this is not the trend reversal. So please make sure you understand that trend reversal, for a trend reversal, these three candles should be down from this green one. If these are finishing somewhere here, it means, or maybe lower, but getting out from this body, it means this is a strong price rejection. The seller is getting control, and now you will be it will be downtrend starting from here. So this is important to note. So any question on these all slides? We are done with the candle patterns. So I'll go through a couple of other things with you guys. But if you have any questions on these patterns, how many candles? What do you mean by that, Ravi? There are, I had shown you almost 7, 14, 14, 16 candle patterns today. Almost 7 to 8 candle patterns for bullish pattern, 7 to 8 for the bearish, and 3 to 4 for the continuation of the trends. I would send you these slides, so don't worry about that. So any other question? Do you recommend using website like TradingView which show if the stock is good buyer? Yes, if you have experience and if you are confident that you can handle this. So these are all the websites you can use, and I will be showing you a couple of, so you can find the stock from there. But again, it all depends on your expertise, how confident or how experienced you have on the trading. But to answer your question, yes, you can do that. Any other question?